Welcome to Just Some Guy Trading with 2021 World Champion Trader Kevin McCormick. Welcome back to Just Some Guy Trading. I'm Kevin McCormick, and this is my weekly outlook for June 25th. This week we're going to be covering the S&P 500, the Nasdaq, the upcoming 4th of July trade in the S&P 500, and a possible turnaround Tuesday setup. After covering that, I'm going to jump into copper, heating oil, and then we're going to do a quick discussion on the fundamental setup for the grain markets and finish up with the technical outlook for soybean meal, soybeans, and corn. This is the order the video goes in. As always, feel free to jump around to the areas that are most important to you. As always, this presentation is for educational purposes only. This week, we're going to start off the same as we have for about the last 6 weeks by taking a look at the Commitments of Traders report on the S&P 500. As we discussed before, we hit record short interest from the hedge funds back here in beginning of June, and I highlighted that this usually does not end well for them, and it did not end well this time. They have been covering their shorts for the last 3 or 4 weeks, and now have covered about half of their short position, and they're back to, I would say, in balance with what they've been at for about the last 2 to 3 months. So most of the short covering is over. So what does that leave us for this coming week? Well, as I mentioned last week, I thought if we break these lows from last week, that we could make a further move lower. We touched it on Friday, but didn't really break through it. I'm still keeping my interest in a short position here, but I might be trying to thread the needle again, because if we do have follow through on Monday and move a lot lower, we're going to be setting ourselves up for what's called the Turnaround Tuesday trade. If you follow me on Twitter, I will send out a tweet Wednesday when the futures market opens if the Turnaround Tuesday trade has met its requirements. If we don't go lower on Monday, then there will be no turnaround Tuesday. The other interesting thing we have going on this week is the S&P 500 usually rallies into the 4th of July, starting about 3 or 4 trading days before the holiday. So that means as well this week around Wednesday or Thursday, I'm going to be looking for buy signals to catch the seasonal holiday trade in the S&P 500 as well. So, interesting market this week. Could be going much lower, but seasonally speaking with the holiday, we should end the week higher heading into the 4th of July. Similar setup in the Nasdaq, but let's go ahead and take a quick look. All right, we're just going to take a quick look at the Nasdaq because the setup is almost identical to the S&P 500. As I mentioned before, if we break these lows from Wednesday, this 14th and the 15th, or the 14th and the 13th, then the market could be moving lower with that move. But just like the S&P 500, once we get closer to the July 4th holiday, we typically rally into and a little bit after the 4th of July. So like I said before, depending on the action Monday, I think it's going to decide how our week goes. But keep an eye out, because if we do break down much lower, we could have follow through. But right now I'm thinking that the follow through lower will probably happen after the 4th of July holiday. Next up, let's take a look at copper. All right, if you watched last week's video, you know that I was looking for a pullback in copper, and we didn't get that pullback until Friday. And so on Friday, we got a good pullback, and we are now in the oversold area with Williams %R. So I'm going to be looking for and taking buy signals in copper starting Monday. I'm going to be looking to get back around in this area. Want to make sure we get a confirmed rally higher. This was a large bar on Friday, so a good move up above Friday's high would be an indication that the copper market wants to take its next leg higher. So that's what I'm looking at for copper for next week. Now, let's jump into heating oil, whereas all the energy markets, including gas, heating oil, and crude oil, look like they could be set up for a rally, but I like heating oil the best. So let's go take a look at why. Okay, But all crude oil, heating oil, and gas look like they're set up for a rally, but I like the setup in heating oil the best for a couple reasons. We've been consolidating at this level for a while. We had a DeMARK 13 buy signal that was hit here. We had the rally, and this is our first pullback from that rally, and we're coming right down into the 18-day moving average, an area where I would expect us to hold and bounce off of. In addition of us kissing this 18-day moving average, we've now officially moved down into the oversold area in the Williams percent R, which if you watch my percent R video, this is a buy area for us. And we have it confirmed with the Williams percent R touching the 18-day moving average. And so I'm looking for us to move back above Friday's high and rally back out of this area of consolidation we've been in for 4 days. So starting Monday, I'm going to be looking for buy signals and heating oil. The setup looks good for a continuation of this rally. So next up, let's have a quick discussion about the grain markets and the fundamentals there, and then we will jump into the technicals. Okay, I hope some of you who've been watching for the last month were able to catch the recent rally we had in the grain markets that are caused by fundamental deterioration in the crops. Some people out there feel like this is the worst start of the crop season we've had since 1992. Also looks like it could be similar to 2012. Why is this important? Because this upcoming week, if the corn crop does not get enough rain, it could be damage that cannot be recovered from, where soybeans still have a little bit of time. And so that's why I wanted to show this analog from 2012. And so as you can see here, this is about where we are right now in the corn market. We had this little rally, but you can see here, end of June in 2012, the rain didn't come, the crops stayed bad, and we had this enormous rally into the corn market until it started to come back down again. These are supply and demand driven markets. If it looks like the supply is going to be lower, we're going to have the price go up, and people are going to try to lock in prices and their need for the commodity for the products they make. So this upcoming week is going to be really interesting for us in the grain markets because the front month contract is expiring next week, and then we're going to be focused on the December contract, which is going to be the new crops. So specifically this week, corn, we could be setting up for an explosive breakout in corn if they don't get enough rain. Soybeans still have some more time to recover from a fundamental perspective, but this is what's important this week if you're a grain trader, is the weather across the grain belt. And if they don't get enough rain, prices could be exploding higher. So that's the fundamental outlook for the grain markets. Now let's jump in to the technicals. When it comes to the grains, I'm going to start off soybean meal. If you recall last week, I was hoping to have a pullback and then be able to buy the grain markets. We didn't get our pullback until Friday, but if you were short then, we had a nice little profit on Friday, and now we're heading right back into the area of the 18-day moving average where I would expect us to have a bounce, because as you can see here, we have clearly broken the downtrend that was been in soybean meal going all the way back to basically March of this year. And we're now making a move higher. As I mentioned before, this move higher has been caused by fundamentals and the drought hitting the crops right now. As I mentioned, soybeans have a little bit more time to recover still, so this one could have a little bit more time to float down, but I think this week with this pullback, especially if we get a couple more days lower, I'm going to be looking for and taking buy signals in soybean meal. Now let's take a quick look at soybeans. When it comes to the soybean market, we have a very similar setup as soybean meal, but I like the soybean meal trade a little bit better because it hasn't had the broad rally already that we've seen in soybeans themselves. As I mentioned on Friday, we had a good pullback in soybean meal, but we haven't had it in soybeans themselves. Also just indicates that the soybean market could be stronger. But as I mentioned before, soybeans still have a little bit more time to recover. But same thing this week, we've broken the downtrend down, very clear move higher. Soybeans have really been hit by the weather premium that's been built in. And as I mentioned before, front month contract's going to expire, and we're soon going to be focused on the new crop this week when it comes to the soybean market. Now, let's jump into corn to end this week's update. All right, as I've already mentioned, corn is set up this week. If we don't get rain, we could have an explosion higher in the price of corn over the next month or so. It's all going to come down to this week's rain. We've already had a nice pullback on Friday. First time since this May rally started that we've gone to oversold in corn. Very unusual to go this long, especially with a 4-day %R, to not have us come back into the oversold area. So we could have a little bit more of a pullback this week, but I think a very good defined risk trade is to go long corn this week when we get the right kind of buy signals. Also, if you're an options trader out there buying some nice upside calls in corn, hoping to catch a increase in the weather premium this week, I think is not a bad idea. Something I'm looking at myself. But definitely this week, I'm going to be looking for and taking buy signals in corn and keeping a close eye on the rain in the Midwest. Because as you can see here, we have a great upward sloping trend of momentum. 18-day moving average is moving higher, and we're coming right back down into these areas where we should expect a bounce and continue to follow this 18-day moving average higher in corn. Thanks for watching Just Some Guy Trading. As always, please hit like and subscribe so you know when all my great content comes out. Thank you, and good luck with your trading.